Guys, welcome back to another episode here with Freedom Finance with your boy Lanny, guys. Recording this here on July 30th, a nice Sunday. Hopefully you guys are enjoying that Sunday. But I thought today we can chat just a little bit about the stock market. And since it's the end of the month, what my wife and I typically do is we go through our income and expenses for the month. We usually do it at least once during the month, maybe around the 15th. And then we hit it again at the end of the month just to see if we have extra savings. And then the big decisions are, how do we allocate those savings? Do we invest it? Do we put it towards the down payment? Since pretty much everybody knows now we've been looking for a house for about 2 years. Or do we put it into outside of dividend investing or ETFs? Do we do another alternative investment such as Fundrise and Sweater? Which is a platform that we both are on right now. So, kind of wanted to talk a little bit about that and then to get your feedback on how I just allocated then $1,000 here at the end of July. I'm curious on what you would do if you had $1,000 extra dollars in your budget after the month is over, and where you would either invest it, where you're saving it, or what other asset classes are you buying with that $1,000. Let's get right into it. So to start here in 2023, my wife and I, we have a bunch of goals, right? And some of those goals are to find a house, which we've been looking for. Our initial down payment goal was a certain dollar amount, and we've already increased that by almost 30% since we hit that goal, since we haven't found a house yet, and since real estate prices and interest rates continue to rise. So if you're in the Cleveland area and you want to sell your nice house at a nice discount, let me know in those comments. No, but all jokes aside, guys, that was one of our goals. We haven't found a house yet, and we actually did look at a house this past weekend. So excited about it, and going into it, it was, hey, let's not settle, let's keep looking. Let's make sure we have the house that we want, because it's a big decision. It's going to be a large cash outflow every single month and, at the settle date. So let's not settle for a house just because a house that we kind of like through pictures is on the market. So we saw the house, perfect house, love the area, love the city. But the big downsides were it didn't have a yard. We have a toddler, so it would be pretty tough to not really have him be able to run around. And then two, there was probably one room that was still needed in the house, and it didn't have it. And there's nothing really you could do about it unless you wanted to put up, drywall and divide a room up into two, which is doable, but probably not ideal. So we ended up passing on the house after thinking about it for almost 24 hours because, and everybody said it in the comments too, don't settle. You've waited this long, so why would you go do it? So again, that's one of the goals that we're trying to achieve this year. The second goal, obviously, I set out was to add $6,000 in new forward dividend income. And that could be ways of buying dividend stocks, buying dividend ETFs, dividend growth, dividend reinvestment, and then seeing all of that work together to add $6,000 in new forward income added. Very far behind because the S&P 500, as we all know, is up pretty much like 20% this year. Setting year-to-date highs, and that means dividend growth stocks are usually riding along the wave with it. I'm a big proponent of always being able to find an undervalued dividend stock, but I'll say this, most stocks I was buying earlier this year, such as UPS, Johnson & Johnson, Pfizer, CVS, Hormel, Tyson Foods, Medtronic, etc., all those stocks that we were buying along the year in the beginning through now, have risen quite a bit in stock price. So it always puts a damper on your journey. Now, again, the reason why I'm bringing this goal up is because we'll get into what I'm doing with that $1,000 that we had, at the end of the month for our budgeted, income and expenses. Third with Fundrise, again, the videos are on my channel you can look at, but my wife and I, we've been investing on Fundrise for almost 4.5 years, since February, I think, of 2019. And we had a soft goal of trying to get to one of these two, either $25,000 in value on the platform in the real estate side, or to invest $7,500 for the year onto Fundrise. So we do $250 per month no matter what. So What you can't control is the market value fluctuation of the Fundrise account. So that's why we have either invest $7,500 or get to $25,000. You can control the $7,500. You can't control the market value swing. So, and the reason why I'm bringing that up, because that might have something to do with what we did with that extra $1,000, because we haven't hit the goal yet. We're before this $1,000 decision, we were more than likely around, I don't know, a few $1,000s away from 25,000. I would say a little over 2,500, if not maybe closer to $3,000 away. And we were about $3,000 away from hitting the $7,500 investment goal. So that's where it's at. Those are some of the big goals that we set out this year. And obviously, like I said, the stock market hasn't helped us. S&P 500 is way up. Dividend growth stocks are way up. Real estate market is, prices are still high. Houses are still staying on the market for a little bit longer, but they're not the right houses per se. One house in particular was, I'll say, between $300,000 to $400,000, and it was pretty much a unfinished house on the inside. So completely gutted still. It's almost like the construction job just stopped. So that's kind of what we're up against, is the houses that are on the market aren't necessarily the houses that we want to buy right now. And then when you're dealing with 6.5% to 7.5% interest rates, obviously I'm not afraid of that, because you can always refinance when rates should be turning down in about 1.5 to 2.5 years. But it's taken a lot of sellers out of the market, because for a seller to want to move out of a below 3% mortgage rate, they don't necessarily want to go in and buy a similar priced house and now have to get a 7% interest rate. So the inventory and the houses that you're seeing on the market aren't necessarily, the houses you want to see. So that's really made this year a little bit interesting for us, especially the last, month plus, as rates continue to rise and the market continued to stay on fire. So we had $1,000 though, guys. Let's get into it. No, I didn't just buy, the Razor Ramon Funko over here, or some of these PSA cards you see on the desk, behind me. Though those are fun, great pieces to collect. Love those cards. Love the Funko of Razor Ramon. Everybody knows I'm a WWE or wrestling fan over there. But no, that's not where I put the $1,000. So we decided here after, going through it, it's, do we just put all $1,000 back into the down payment fund where we're, at SoFi Savings, where we're earning at least 4.4%. Sometimes when it hits a certain amount, if it hits at least 5,000, we'll move it into a no penalty CD on the Raise or Previously Saved Better website, where we usually earn over 5% in a no penalty CD. So we continue to move money onto that platform, but for now, minimum, we will earn 4.4%. It's like, do we put all $1,000 on Fundrise since the stock market is so hot? Or do we just buy, Vanguard's high dividend yield? Do we just put all $1,000 on there, set it and forget it? So, I always like a balanced approach, similar to your net worth statement, similar to your own assets. You really want to balance it out and maybe hit all goals. There's nothing that says you can't do that. So that's almost exactly what we did. The easy one was, okay, let's put 400 and let's add that, to the down payment goal. Let's do 40%, $400 to SoFi savings account. Keep it there, 400 at 4.4% for now. Okay, so now we have, let's say $600 left. Well, I've been doing myself $300 per week on Mondays into VYM, and maybe an extra $150 sometimes on Wednesdays. And my wife continues to buy 2 shares of VYM on Mondays. So now that the price has risen to about $110 a share, we wanted to make sure we could do at least 3 shares. And we just rounded up and said, hey, let's do $350 into Vanguard's high dividend yield ETF. Yields just about over 3%. Dividend growth for the first 2 quarters this year versus the last year's first 2 quarters. The dividend growth right now is looking at about 5.5%. So if somehow, even if they keep it up, obviously you're looking at 11% annualized growth rate if they're able to keep it up for the next 2 quarters. Even if they're only able to do half of that, let's just say it's, again, half of that would be 2.75. So if they're able to even do 2.75, you're still looking at a year-over-year growth rate of over 8%, which I always conservatively look at VYM as a 7.5 to an 8.5% growth. So it fits right in there. And the metrics still are in line. And they're only up 2% year to date with VYM. So that's why we decided to do an extra $350 right into Vanguard's high dividend yield ETF. Again, some of the top 10 stocks are, Pepsi, Johnson & Johnson, Procter & Gamble, JP Morgan, Chevron, Exxon, etc. It's actually surprising that we only own 4 or 5 different companies of the top 10 holdings. But again, it has a great balance of yield plus dividend growth. And we felt like that was a wise move to make because we couldn't find just one individual stock that we wanted to do. So 350 there, 400, that's 750 out of the $1,000. So we said, hey, let's just do 250 more into Fundrise Real Estate Investment platform to purchase, another investment into the real estate investment on the Fundrise website. So we did just that. And the reason why we like the 250, because that's exactly what we're doing per month. So it's like adding an additional month to the investment gets us a little bit closer to that $25,000 or $7,500 in total investment goal on the Fundrise in 2023. So that's what we did with $1,000. $400 into the down payment fund because, hey, prices are where they're at. Maybe this will help us get that house that we want and still earning 4.4%. On our money. And then we did, again, 3 shares, essentially 350 flat. We'll do that on the SoFi investing app. 350 into VYM, Vanguard's ETF. And then 250 to cap it off into the Fundrise platform. So that's what I did with the extra $1,000 to hit on 3 different goals. The house goal, the dividend income goal, and the Fundrise real estate investment goal. So let me know what you guys think of what I did with the extra $1,000. I highly recommend you, and if you have a significant other, you and your significant other, go through your income and expenses, see if there's any wiggle room or any extra money you have in that income and expense for the month to move towards some of those goals. It could be travel, it could be house related. Hey, it could be some new clothes, it could be a new car. Again, that's up to you and your goals. I recommend that so that you stay in line with what your personal journey is about, your personal finance journey, and what goals you have set for the year. Again, I look forward to the feedback that you guys have in the comments. Oh, and I forgot to mention, definitely don't hesitate to subscribe to the channel, like the video if you got some valuable feedback on what to do with an extra $1,000. Appreciate you guys for stopping by, and I'll check you guys on the next episode.